Welcome to Crypto Minutes, your daily cryptocurrency news for March 9, 2019. We source a minimum of 5 of the best trending articles of the day, from popular news aggregator CryptoPanic.com. Timestamps and the original articles can be found in the description links below.
Ripple News: Ripple-powered firm lowers fees by 80%, making remittance faster than SWIFT, cheaper than Western Union. Brazil-based payment service platform BTC Global uses RippleNet to conduct remittance payments for people from various countries, keeping prices down and speed high. Contents: 1. BTC Global works on RippleNet. 2. SWIFT trials blockchain. 2. JP Morgan launches JPM Coin. One of the things that attracts corporate clients and regular people to crypto is the opportunity to conduct payments much faster than traditional bank transfers or cheaper than firms like Western Union. Ripple's blockchain is one of those specially designed technologies that allows other payment services to conduct remittance for numerous customers in a completely new way. BTC Global works on RippleNet. Among other similar companies, BTC transfers funds around the world by using blockchain. Its current fees are much lower than those of Western Union, where they total around 10% of the transferred amount. RippleNet is also much faster than the SWIFT system that has been used by banks for over half a century now. This is particularly convenient when people working away from home want to send remittance to their families. BTC also enables small international businesses to pay out salaries to their employees who work from home in other countries and who are sometimes located on the other end of the world. Cryptocurrencies, including XRP, are used for that. Bitcoin (BTC) following parabolic trend, $50,000 by 2022 expected. Bitcoin holding parabolic trend, even in crypto winter. Over the course of 2018, Bitcoin (BTC) broke a number of key technical levels. In some cases, the cryptocurrency fell so fast and hard that its moving averages didn't catch up to it for months. And while nearly every notable support line, like the $10,000 and $6,000, have been snapped, an analyst argues that BTC remains in its most essential uptrend to date, one that could bring the digital asset to the moon. Cane Island Crypto, the creator of Network Value to Transactions (NVT), a popular fundamental measure used for cryptocurrency valuation models, recently took to Twitter to explain that when BTC isn't manipulated by jack-leg exchanges, it remains in a perfect parabolic trend. Giving his point further credence, he posted a chart which showed that since BTC started trading at sub $1, it has held a consistent uptrend, save for a few nuances here and there that came after a significant drawdown. Extending the trend, the Texas-based analyst determined that if Bitcoin's implied price for 2019's end will be $7,800, 2020's end will be $15,426, and so on and so forth. The Cane Island investment manager noted that if Bitcoin continues to hold this line, by the end of 2022, BTC will be valued at $52,321 and just under double that just 12 months later. Sky's the limit? The Cane Island analyst isn't the only industry commentator to claim that BTC remains in a multi-year uptrend. Magic Poop Cannon, a seeming BTC permabull, recently took to TradingView to explain why he believes that the leading cryptocurrency remains in a very clear cyclical uptrend, in spite of the downturn seen last year. He argues that the logarithmic uptrend line, seen in pink below, which is kept in place by two upper bound and lower bound trend lines, is still being held. Doing some calculations and historical analysis, Magic argued that while Bitcoin will range between $3,000 and $5,000 for much of 2019, the asset could begin to rally as the uptrend line begins to gain steam, as it were. In fact, he notes that by August of 2023, if BTC holds above the aforementioned key level of support, it will be worth right around $150,000 apiece. This is bounds ahead of the aforementioned $93,382, but more and more analysts seem to be coming to the conclusion that the sky's the limit for Bitcoin. But some have made it clear that the journey past $20,000 and beyond won't come easy. Leah Wald, for instance, who subscribes to the hyperwave theory, claims that BTC moving under $2,000 is far from off the table. To accentuate her belief in this theory, the popular trader recently took up a 1 BTC bet with Philb, as she believes the Bitcoin price will hit $1,500 before it trades above $6,500 on Bitstamp. Binance backs massive crypto scalability solution for mainstream adoption, as largest U.S. supermarket chain expands ban on Visa. Binance CEO Changpeng Zhao is supporting a blockchain startup that could rival Visa. Zhao says scalability issues are pinching the space and curbing mass adoption. The lack of valuable solutions and good user experiences of blockchain-based technologies are caused by its limited scalability possibilities, which have been a major hurdle towards unlocking its significant adoption potential to date. He and his team have selected Stellar Network, a scalability solution, as the next incubation project for the company's venture capital arm, Binance Launchpad. Stellar is currently at the forefront of solving this challenge with the early demonstrations of its sustainable crypto economics construct and Layer 2 blockchain architect powering it. According to the announcement, Stellar addresses key criticisms of blockchain technology, that it's simply too slow and sluggish, and not ready for prime time, like credit processor Visa, which can handle high transaction volumes. Stellar Network's testnet currently hosts Ethereum transactions, and its finality latency, to be 20,000 times faster with zero fees for smart contract transactions. Binance says the network effectively turbocharges blockchain technology, turning it into the kind of robust backbone that can rival legacy systems. Stellar is positioned to unlock blockchain's innovation potential on a larger scale for various real-world use cases and solutions, such as interactive gaming, general pay-per-use services, non-custodial financial assets exchanges, microinsurance, and decentralized derivative exchanges, electricity power exchange and Internet services. Rapid developments with crypto-scaling solutions, such as the Lightning Network and Stellar Network, are coinciding with the latest corporate boycott against Visa. Supermarket giant Kroger, the fourth largest private employer in the U.S., has expanded its ban on Visa credit cards. Kroger says Visa's processing fees are exorbitant. The supermarket chain banned Visa credit cards last year at its Food Co. stores, and has now expanded its ban to its Smith's division to include 250 locations, effective April 3. Smith's 142 supermarkets and 108 fuel centers in Utah, Nevada, New Mexico, Wyoming, Idaho, Montana and Arizona will no longer accept Visa credit cards. Says Mike Schlottman, Kroger's chief financial officer. We're not going to stand for these high fees. Morgan Creek Digital CEO Anthony Pompliano says he has contacted Kroger to discuss implementing new payment options that are far more cost-effective cryptocurrencies. Schlottman says Visa has run amok. They conceal from customers what Visa and its banks charge retailers to accept Visa credit cards. At Smith's, Visa's credit card fees are higher than any other credit card brand that we accept. Visa's excessive fees and unfairness cannot continue to go unchecked. We are prepared to take additional steps to reduce the cost of accepting credit cards in order to keep prices low for customers. No option is off the table. Although there is no confirmation from Kroger about supporting cryptocurrencies at any of its locations, crypto advocates expect to see an increasing number of payment rails supported at big brand locations. Starbucks, for example, is reportedly gearing up to allow its customers to convert its Bitcoin to fiat in order to buy coffee. Fidelity crypto chief says hard fork may delay firm support for Ethereum. Fidelity Digital Assets (FDAS) will take its time about adding support for Ethereum, the executive in charge of the new platform said. The digital asset trading and custody branch of Fidelity Investments, which went live this quarter, has developed an internal framework for evaluating any cryptocurrencies that may be added in the future, according to FDAS President Tom Jessup. While Jessup has previously said FDAS might look to add Ether and other cryptocurrencies, he told CoinDesk Thursday that the process to do so may not be cut and dried. We're currently supporting Bitcoin. We have designs to support other coins over the balance of the year center to various criteria including our in-house selection framework, where we obviously look at client demand and other things, he said. This framework looks at how decentralized a coin is, what the client demand looks like and whether there are any peculiarities about the protocol which would make it difficult to launch or continue to support a given cryptocurrency on FDAS platform. And, so far at least, client demand has correlated tightly with market capitalization, Jessup said. We will probably go in market cap order, that's where the demand is, but it doesn't mean that we will list every coin, he said. There may be reasons why we won't list a coin that have nothing to do with quite frankly client demand. As one example, Jessup pointed to Ethereum, currently the second largest cryptocurrency by market cap. He explained, "We'd love to have support for Ether, but you have a hard fork coming up and some upgrades, so I think we're trying to see how those things work out before we make a decision to put them on the platform." The recent Constantinople hard fork implemented a number of upgrades to Ethereum, including lowering the Ether block reward, as well as a few other technical changes. Another one called Istanbul is tentatively expected in October. Part of the challenge is in ensuring that FDAS can protect investors, Jessup said. He cited another cryptocurrency, Ethereum Classic, as an example of a project that would require an in-depth risk assessment due to the 51% attack the protocol suffered earlier this year. Jessup did not provide any sort of timeline for when new assets might be added to the platform. Goals for 2019. Looking ahead, Jessup said FDAS plans to scale its business over the rest of 2019, and wants to cover 90% of its market in the US by the end of the year. This scaling will include both securing regulatory approvals, such as money service business licenses, as well as continuing to work out any possible bugs in the platform at present. Despite crypto winter, the market is still pretty robust and so we're excited about that, he said, adding, "The goal for the rest of the year is scale the business in terms of adding new clients and expanding the scope for offering trading execution services. We say we're live, but it's also a function honestly of where we have jurisdictional authority to operate." While Jessup declined to say which states FDAS currently has licenses in, or even how many, he said it is a reasonable number and the firm is continuing to work on acquiring licenses through the rest of the year. "We're still in the process of collecting licenses to do business in multiple jurisdictions," he said, "but we're very encouraged by the progress we've made so far." Moreover, he added, "We continue to pursue status as a qualified custodian and that's still in sight for this year and it's really been a priority we have." While FDAS is looking to secure state-level licenses, Jessup did note that the company is prioritizing the states which have larger market shares, rather than focusing on every state at once. Client interest. Fidelity has seen a significant amount of demand since its announcement in October, Jessup told CoinDesk, with a wide variety of firms expressing interest, everyone from dedicated crypto funds to hedge funds, family offices, intermediaries and even individuals looking to launch their own private fund products based on crypto have reached out. FDAS has also received interest from exchanges hoping to offer clients custody through Fidelity, Jessup said. "I know in terms of assets under management, it's anywhere from like low single-digit millions up to tens if not hundreds of millions," he said of the potential business from this channel. The company surveyed various types of funds as well, finding that interest in crypto investment has remained consistent across the different types. Jessup explained, "We've still seen consistent interest from institutions, I think largely because institutions have been doing their homework and returned to understand the space, and quite frankly wouldn't make a decision to invest at any price until they really understood their own personal investment theses." Included in Fidelity's survey were some number of pension funds, and while some have asked questions about allocating capital, Jessup said he does not see any others actually committing funds to the asset class apart from a previously announced investment by a Virginia County retirement fund in a Morgan Creek vehicle. Is it a bird? Is it a plane? No, it's a proverbial message in a digital bottle being hurled into outer space by a Bitcoiner, paid for in Bitcoin. The crypto project, created by MediumsQuiz, leverages the cosmos to help people around the globe leap over governments and nation-states to stay connected without the use of the Internet. Implications, unknown. Powered by Spacebit.live, users can pay a fee in Bitcoin to send messages through satellites operated by Blockstream. The messages signal a growing zen for moving data, value, Bitcoin and crypto through outer space. Blockstream, the blockchain technology company that launched satellite services in August of 2017, allows users to make Bitcoin transactions through leased satellites. The company has been developing the infrastructure primarily for users with limited internet access, empowering people in Africa, Europe and the Americas to make Bitcoin transactions without being connected to the web. Spacebit, a Blockstream satellite client, has a simple user interface that makes it easy for crypto enthusiasts and tech heads to compose their messages and click Send Message to Space. Users make small payments, worth 3 cents in BTC, via the Lightning Network, sending messages that can be received by users equipped with a Blockstream satellite receiver. Twitter user @Grubbles tweeted a message hurled into space in January by an alleged early crypto adopter and developer. It was written in diary style, plotting the days. "I kept a small amount of attention on Bitcoin, and in 2016-2017, started following it closely, playing on testnet, and getting my skin in the game in 2017. The last year was amazing, I learned a lot, sent my first Lightning testnet payment in early 2018, and was blown away, and got dizzy of the possibilities of the fast, cheap Bitcoin micropayment possibilities. So here I am, left my job, I have some money to keep me up and I'm building my first Raspberry Pi Lightning node, and broadcasting messages from satellites. Still feels surreal at times. So if you want to support some non-dev from a post-Soviet state, have at it, and thanks. My dream is to accumulate 1 BTC, and I think that will be more than enough for the future." Although Spacebit.live and Blockstream make it easy to send messages, they require a small satellite dish connected to a PC, laptop or Raspberry Pi to complete the transmission.
Thank you for listening to Crypto Minutes. This is not financial advice. If you enjoyed the articles, please click like, share and subscribe or donate. See you tomorrow, for more breaking news.